What if a daring government action caused XRP to soar? Imagine this. After the US government makes a historic financial decision, XRP, the digital currency that has been the talk of the town, suddenly soars to an incredible $10,000 per token. Sounds crazy, doesn't it? We're going to explore a theory today that has the cryptocurrency community talking. Are you sick of phony gurus who pretend to be knowledgeable traders but never engage in live trading? I trade live on the second biggest cryptocurrency exchange, where results are unfake and everything is clear. I have continuously closed each month in profit for more than 440 days. My followers have made over 70% profit with only 4% drawdown in the last 90 days alone. Results that have been verified, not just claims. Do you wish to view my confirmed statistics? Start duplicating my trades for free right now by clicking the first link in my profile. It's not sci-fi or fantasy either. We'll explain how a possible T-bill swap can cause this enormous spike in this video, what it might mean for you and other investors, and why it's possible that influential figures like the US Federal Reserve and Treasury are working behind the scenes. Stay tuned because what we're going to discuss has the potential to fundamentally alter your perspective on cryptocurrency. The scoop is as follows. Vincent Van Code, a market expert, has put out an incredible notion. He proposes that Ripple, the company that created XRP, may reach an agreement with the UI government or perhaps a powerful entity like the Federal Reserve to acquire a portion of its escrow coins. The worst part, they would pay an astounding $10,000 per for them. This is where things get crazy, though. It's not just about money. Treasury bills might be used by the government to pay Ripple instead. Yes, Uncle Sam's is that we all trust. Ripple would receive a supply of T-bills in exchange, which they could use to increase liquidity or obtain loans. This is not merely a financial backroom transaction. It's a daring move that might completely change how the world market views XRP's worth. Are you prepared to dissect this? Come on. Approximately 38.1 billion XRP tokens are currently in Ripple's escrow, a massive digital vault poised to cause a stir. Now, consider this. What happens if a big entity such as the government or a financial giant steps in and purchases a sizable portion of those tokens at a set price of $10,000 each? That action would immediately establish a norm for prices worldwide. Imagine the effect of Ripple's, pun intended. All of a sudden, investors throughout the world realize that XRP is worth at least $10,000 per token. Institutions, banks, and even entire countries would rush to reevaluate their plans. Financial revolution is something that no one wants to miss. Here's the real kicker, though. Why would the United States government take such a risky action? That is the crucial question. Or ought we to ask the question of the $10,000 token? Van Code outlines 3 main justifications for the concept, and they are important to consider. The first priority is to stop international actors like China from manipulating the market. Even a huge sell-off wouldn't bring XRP's price down below the magical $10,000 mark. Consider it a financial safety net that guards against the type of anarchy that has before occurred. The next step is a power move to increase the US dollar's clout. Even as the globe begins to gradually move away from traditional currencies, the government might strengthen its grip on global finance by controlling the value of a significant digital asset. Third, consider a change that might create the foundation for an economy powered by blockchain, where digital assets and immediate payments are accepted as the norm. The potential market capitalization of XRP could reach previously unthinkable heights because to its fixed supply of 100 billion tokens. Would this actually occur, though? Van Code believes it goes beyond wishful thinking. He asserts that this idea is completely achievable if governments are genuinely committed to taking the lead in the blockchain field. He contends that A concerted effort by the Federal Reserve and the IMF might propel the adoption of XRP globally, leaving other countries rushing to catch up. See the ripple effect now. Pun intended. All XRP holders might awaken to discover that they are instantly multimillionaires. It sounds unreal, doesn't it? There's always a catch, though. Governments may impose stringent rules, directing regular investors away from the XRP frenzy and into central bank digital currencies. Banks and businesses might also start a frantic scramble to stockpile XRP for themselves, causing a flurry that completely upends the financial industry. Here, let's take a moment to zoom out and think about the wider picture. There is more to this theory than a single cryptocurrency taking off. It concerns a radical change in the way we view value and money in the modern world. The US dollar has dominated the market for many years as the foundation of international finance. However, what if that dominance were to be challenged by a digital asset like XRP? Consider this. The government buys $10,000 worth of Ripple's escrowed XRP tokens with T-bills. Not only would such an action establish a precedent, it would let everyone know that blockchain is more than just a passing trend. By tearing down previous obstacles and rewriting the laws, it would solidify itself as the cornerstone of a daring new financial era. Let's dissect it now. What precisely are T-bills? Short-term government securities are available for those who are not familiar with them. Purchasing one is similar, like giving money to Uncle Sam, who will then give you an IOU and guarantee that you will be reimbursed, plus interest. The kicker is this: among the safest investments available are T-bills. Why? Because the U.S. government backs them with all of its trust and credit. It's comparable to having a strong safety net in the financial industry. This notion becomes really intriguing at that point. What happens when the future of value begins to link with one of the safest assets in the world? Consider this. The government purchases XRP using T-bills, a form of currency, rather than cash. This strategy gives Ripple a reliable asset to work with, in addition to keeping the money moving across the financial system. The interesting turn of events: the government could effectively lock XRP's value at an astounding $10,000 per token by backing it with T-bills. Imagine it as establishing an unbreakable pricing floor, a safety net that no one can fall below. Knowing that XRP wouldn't fall below this barrier, regardless of how erratic the market gets, would provide investors a renewed sense of confidence. It's a daring concept that might have a knock-on effect on both sectors by fusing the innovation of digital money with the dependability of traditional finance. Not everyone has sold, though. Fixing XRP at such a high price, according to critics, is sheer fiction. They quickly point out that it would take decades of consistent organic development, if it ever occurs, for XRP to naturally rise to $10,000 due to market forces. Unquestionably, it's exciting to consider what such a jump could entail for the future of finance, regardless of whether this idea is visionary or unduly ambitious. Opponents contend that this type of intervention would cause unanticipated economic repercussions and possibly upend international markets in ways that